Yeah, good morning, everyone. So we had seen some decline in the Asian market, mainly driven by what is going on in the world. And also dollar index is showing some sign of reversal. We had seen dollar index coming off from 110 to 95, 96. And now there are some sign of reversal. So if that happens, then that can act as negative for the emerging market countries. So need to be careful on that account. Apart from that, US continue to perform well. They are hitting a new high every day. Uh, that is mainly driven by the corporate results over there. 83 of the 155, 83% of uh, the results which has been declared in the US of almost around 155 companies in S&P 500 has shown a result above expectations, and that is leading to the market moving up. Apart from that, commodities are mixed bag, wherein iron ore has come off by around 2%. That is mainly because of Vale yesterday has declared that the production in last quarter was higher. Then apart from that, the shipment from Australia is lined up and has increased. So that has put some pressure on the iron ore, and which has come off by almost around 2%. Whereas aluminum was flat, copper has come off, oil has moved up by almost around $1. So there are mixed reactions in the commodity, but overall, emerging market need to be careful and watchful. And I'll request technical team to take up from here.
Yeah, thank you. Good morning, everyone. So yesterday in Nifty, we saw it closing on the bearish side, whereas it halted over the support of 50 SMA, which also happens to be a crucial psychological support level at 25,000. Overall, Nifty selling pressure seems to be more on the higher side due to the mixed earning reports of IT, but we can see some buying in Nifty PSU banks and pharma side as well. So on the intraday basis, we can see Nifty opening on a gap down note and then trading in a range bound movement, where an immediate support for Nifty can be seen at around 24,940 levels. Closing below that, Nifty could be expected to go more below 24,870 and 24,800 mark. So unless and until Nifty doesn't closes above 24,800 mark, we are still holding on to our bullish bias. On the flip side, 25,140 could be a strong resistance, and for the upside, 25,200 would be a good resistance level as well. So coming on to the Bank Nifty side, Bank Nifty seems to be trading on a range bound momentum where although it gave a closing in red yesterday, but seems to be on the healthier side as compared to Nifty. Bank Nifty on intraday basis, the support lies at around 56,870 levels on the downside, where a decisive close below that could expect a fall below or until 56,640 and 56,470 levels. The immediate resistance lies at around 57,370 levels. A close above that could take the index at around 57,640 levels. Now, coming on to the stock perspective, on this falling market, we can look for to short in a stock of called as 5 star, where you can put 718 as the entry level, having 728 as a stop loss and around 700 as a profit target. 5 star seems to be trading good on the bearish side, having formation of lower highs and lower lows. So this could be a supportive for the bearish rally to trade into. So that's all from the technical side. Forward it to the derivative side.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as you are witnessing that the gift nifty is likely to open 130 points on the negative front. In yesterday's session, also we have witnessed that once the market open, after that there was a continuously selling which was being witnessed in the market. Currently, the situation is like a Nifty is continuously facing the range of 24,900 to 25,200 mark, where the put and call positions are also in that range only. After yesterday's session, the weekly expiry, the call writer and put writer positions got majorly liquidated between 24,900 to 25,200 mark. In that, the major liquidation was from the put writer front due to the selling which we witnessed in the yesterday's session. But still, we are seeing that 25,000 mark put writer positions is not getting liquidated on the healthy front. Currently, it is still holding the position strongly at 25,200 level. But as per the current scenario and as per the last 1 week of a trading session, we are witnessing that Nifty is facing difficulties in maintaining resistance on maintaining levels on the upside zone. Currently, we are witnessing that continuously from the upside levels, the index is showing some negative trend as India VIX is also trading near 10.72 level. So India VIX is waiting for the trend clearance. Currently, India VIX is at the stable road, and whenever the India VIX is trading near 10.72 level, at that point of time, some sort of major momentum takes place of around 400, 500 points on the either side. So currently, Nifty is having the zone of 24,900 to 25,200 mark. Whichever side, if Nifty gives a closing after that, we will witness 400, 500 points of momentum on the either side. So currently there is not much of the trade kind of situation at this point of time. We will wait for any trend clearance for the further breakout or breakdown on the initial levels. So hold your long position with the support of 24,900 level. Once that level gets broken out on the closing basis, after that the longs need to be exited. And if 25,200 level gets broken out on the upside level, then the major resistance shifting will be take place toward 25,500 level. For any stock sector recommendation, the counter that looks positive in today's session will be Mankind, and number looks positive, while on the negative front, Coforge and Persistent looks negative. So that's it from the data front. Thank you.
Good morning, everyone. On the result front, yesterday Nestle India posted the result below expectations. Revenue grew on a lower rate at around 6%. The weak performance was broadly led by milk and nutrition segment, as other segments, that is beverages, confectionery, and prepared dishes and cooking aids, have seen growth in double digits. Lower gross margin impacted operating profitability, where EBITDA margin reported 21.6% versus 23.1%. The stock is trading at around 66 times P to FY27 earnings, and we remain neutral on the stock. Coromandel International posted the result above expectations. Revenue grew by around 50% on a YY basis. Companies, both the segments, has seen that is nutrient and crop protection has seen good performance. The top line for nutrient segment has seen 51% growth on a low base of last year same quarter, while margins have seen a slight decline. The crop protection has grown at 31% with margin improvement by around 400 basis points. Overall EBITDA margin reported at 11% versus expectation with in line with expectation. The stock is currently trading at 31 times to FY27 earnings, and we will provide the update post the con call. Yesterday, SRF Limited hosted the con call. If we look at the result was in line with expectations, and in chemicals, it has seen growth of around 24%. The management is retaining its guidance with 20% growth in FY26 with EBIT margin in the range of 25 to 26%. In chemicals, it is expected to lead the growth with the new product launches in pharma intermediate and agrochemicals. In fluorochemicals, it will continue to focus on the HFC production and investments in the fluoropolymers, propellants, and value-added films to support the long-term growth. We remain long-term positive on the stock at a current valuation of 49 times to FY27 earnings. On the IPO front, today, Shanti Gold International Limited is opening for subscription. The price band at upper end is set at rupees 199. The issue size is of 360 crore, which includes the fresh issue. And post listing, the market cap is expected to be around 1,435 crore. The company is a leading manufacturer of high quality 22 carat CZ casting gold jewelry in India, with an installed annual production capacity of 2,700 kg. The company is established in 2003, and it offers a wide portfolio of bangles, rings, necklaces, and complete sets. The company has built a robust client base, including major names of Joya Lucas and Lalita Jewelry. It has a presence in 15 Indian states, 2 union territories, and the 4 international markets. The proceeds from the issue will be utilized for the capex requirements to set up the Jaipur facility and towards a working capital requirement of around 200 crore and the debt repayment of around 17 crore. The company has demonstrated a strong growth over the last few years, with the revenue growth of around 28% and the profitability growth of around 68% between FY23 and FY25. The margins have also improved, where the EBITDA margin improved from 6.3% in FY23 to 8.83%. However, we remain concerned about its business model, which requires high working capital due to its long inventory cycle. The cash conversion cycle of Shanti Gold is higher when compared with the industry peers. Despite healthy growth in top line and profitability, we have seen the operating cash flow is negative for FY25. The issue is priced at around 26 times to FY25 EPS compared to 22.6 times of industry average. Thus, we recommend neutral rating on the IPO. Thank you.
Good morning, everyone. Emphasis has reported numbers a little ahead of expectations. Revenues have grown 1.6% quarter on quarter. Margins at 15.3% have remained stable quarter on quarter. What is noteworthy is the TCV for the quarter, which has come in at $760 million. That's highest ever deal wins in a quarter for the company. So the company has won 4 large deals in the quarter one. That is 3 in $100 million plus and 1 in $50 million plus. And the company expects FY26 to grow 2 times the industry growth, backed by this healthy TCV. Stock is available at 23 times FY27 expected earnings, and the outlook is positive for Emphasis. Secondly, Hexaware reported numbers below expectations. Revenue growth came in at 1.3%. Margins fell sharply due to one-time acquisition and investment cost. Stock is available at around 27 times EPS for calendar year FY26, and outlook is long-term positive for Hexaware. And Cyient Limited reported dismal numbers on revenues and margins. Outlook is neutral for Cyient. Thank you.
Yeah, apart from this, few more results. Bajaj Finance reported numbers, and report numbers were as good as in line with expectations, and had shown steady growth and also guided for similar type of growth, that is 20 to 24%. Asset quality was also stable, and NIM has come off a bit, but uh, company expected to bounce it back towards the end of the year. Overall outlook continue to remain long-term positive. No doubt short-term valuations are a bit on the higher side. Ujjivan small finance results were a bit impacted and came a bit lower, mainly on account of the stress in the microfinance book, which has not yet gone away. It is still continuing for one more quarter. I think from the next quarter onwards, the stability will come, and Q3 onwards, the problem is likely to get resolved. And the higher credit cost will also likely to come off. bank is diversifying in secured book aggressively and has targeted higher growth in secured book at 35%, whereas the total bank growth target was 20%. NIM projected is around 7.9% towards that in the Q2, and for the whole year at 7.8%. So overall, from a bit long-term perspective, positive. Any dip or corrections in the stock can be used to purchase this stock. Then Sambhav Steel came up with the number, and number very strong. Q1, they had declared now the result for the Q1, which has shown high increase of around 13% quarter on quarter in the revenue. EBITDA has shown smart improvement, and the margin has moved up to 13% versus 10% in last quarter, and EBITDA per ton has come around 8,000 versus 5,300, 400 in the last quarter. Very sharp increase that has led to very EBITDA coming in at 73 crores versus last quarter 48 and last year 46 crores. So no doubt the stock has moved up uh, ahead of the earning, and now it is somewhere at around 14 times EV by EBITDA Q1 analyzed earning. Near-term project has already come into the results, and now company has planned for higher, bigger projects of 1.2 million ton, but that will take that is at very initial stage and will take a lot of time. So for near-term outlook is neutral. Sirma SGS has come up with a number, and numbers over good. Company has given maintain its outlook of 30-35% growth and 8.5 to 9% margin. The key thing is the stock has moved up ahead of this earning and already higher. But management has indicated that they are looking for larger project of TCB under the government PLI scheme, and the process for the same is on. If the approval comes, then this can become a big trigger or project for the company and can lead to multi-year higher growth, and which can support the stock. So for in expectation of that approvals from the government of PLI scheme, the stock can continue to remain strong and can see up the upside, and long-term outlook because of that is positive for the company. Yeah, that's all from us. And I'll request the commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. Uh, so in today's session, we might witness some consolidation in gold, silver. Gold on the lower end, 98, 100, 98,000 are good support area where one can initiate a buy and maintain a stop loss of 97, 800. On upper end, prices are resisting 99,000, 100 levels. So on a pullback around 99, 100, one can initiate a sell with a stop loss of 99, 400. And in silver, one can witness some selling pressure if prices are sustaining below 1,15,500, and on downside again 1,14,000 seems to be an important support area. If that breaches, then one should be cautious in long positions and strictly maintain stop loss of 1,16,700. And on lower end, one can also initiate a buy around 1,13,000 and with a maintain a stop loss of 1,12,000. Copper yesterday witnessed a sell off. Prices are resisting 900, 901 mark, and likely to witness a correction. So selling on rise around 895 is recommended with a stop loss of 900. and on downside expected to test 880, 885 levels. So one can initiate a sell around 95, and zinc too one can sell around 270 levels and maintain a stop loss of 272. On downside, 267, 265 are the levels where one can take profits. Uh, Crude oil, if prices are sustaining above 57.50, then we might see witness a fresh buying. So watch out for crude 57.50 levels, or also one can initiate a buy around 5700 with a stop loss of 5620. And natural gas prices are witnessing selling pressure from 270 to 72. So one can sell around 272 with a stop loss of 280. And on downside, can test 255 levels. So that's it from us. Thank you very much.